When I first dipped my toes into the world of investing, I was overwhelmed. There were endless options, complex jargon, and a constant buzz of advice that seemed to contradict itself. I wasn't looking to become the next Wall Street tycoon. I just wanted a way to grow my money without losing sleep over it. If you've ever felt the same way, you're not alone. That's why understanding the best strategies for beginners isn't just helpful, it's empowering. The first thing I learned was the power of starting small. The idea of needing thousands of dollars to begin investing is a myth. With fractional shares, apps like Robinhood or Acorns, and ETFs, exchange-traded funds, even $50 can become your starting point. The key was consistency. Investing $50 a month might not feel monumental, but over time, those small amounts snowball into something significant thanks to the magic of compounding. Diversification quickly became my best friend. Instead of putting all my eggs in one basket, like betting everything on a single stock, I spread my investments across a mix of assets. Think stocks, bonds, and real estate funds. A simple way to do this is through index funds or ETFs, which give you exposure to hundreds of companies without needing to pick individual winners. It's like having a safety net. Even if one investment dips, others can balance it out. Risk tolerance was another game changer. When I first started, I didn't know my appetite for risk, so I took a few quizzes online to gauge it. Turns out, I was more cautious than I thought. That helped me tailor my portfolio, fewer high-risk stocks and more stable options like bonds and dividend-paying funds. Knowing how much risk I was comfortable with meant I could sleep soundly at night, even when markets fluctuated. One of the best pieces of advice I received was to think long-term. Investing isn't about quick wins or timing the market, it's about time in the market. I stopped worrying about daily price swings and focused on staying consistent. When I invested regularly, regardless of market conditions, I could average out the highs and lows, a strategy called dollar-cost averaging. It's a slow burn approach, but it's one of the most reliable ways to grow wealth over time. Perhaps the most surprising lesson was how much fees can eat into your returns. I used to think a 1% fee was negligible until I did the math. Over decades, that small percentage can siphon away thousands. Now, I look for low-cost index funds and ETFs, avoiding actively managed funds with higher expense ratios unless I'm confident in their performance. But beyond strategies, the biggest lesson was this: investing doesn't have to be intimidating. There's no need to memorize stock charts or become an expert overnight. It's about starting with what you have, learning as you go, and staying patient. Today, my portfolio isn't flashy, but it's steady. It reflects my goals: financial freedom, peace of mind, and a sense of security for the future. These beginner-friendly strategies help me build wealth without constant worry, and they can do the same for anyone ready to take the first step. Remember, the hardest part isn't the strategy, it's deciding to begin.